Hi you guys, welcome back to my channel, and I want to share this article with you from NPR that was published over the weekend, and it reads, home prices see the biggest drop in 9 years thanks to higher mortgage rates. Higher mortgage rates are throwing a bucket of ice water on the superheated housing market. Home prices in August were down 6% from their peak in June, the biggest 2-month drop in nearly a decade. The pace of home sales has slowed for the 7th straight month. In addition, there is a statement from the chief economist of the NAR, the National Association of Realtors, Lawrence Yun, and he says that the housing market certainly reacts to monetary changes. Obviously, rates go up, the cost of living goes up, your monthly payment goes up, you can't afford as much house. Therefore, simple supply and demand. He adds that home sales as a whole are down about 20% compared to where they were just a year ago. Mortgage rates are anticipated to increase per the Federal Reserve by the end of the year and again by the end of next quarter, so next spring. You've seen the change this year. At the beginning of the year, high 2s to mid 3s. Now we are well into the 6s. Some people are into the 7% range when they go to price out their payment. And that in no way is suggesting that we are about to have a housing crisis. The experts can sense, and I agree, that this is much different from 2008 when the bottom literally fell out of the top. We have too many regulations now. Back in the day, you could go apply for a loan, and because they didn't want to discriminate against you in any sort of way, you could get approved on a loan for a house that you truly couldn't afford. So try applying for a mortgage loan today with no job, no tax returns, and bad credit, and you let me know how quickly you get approved. Home values as a whole, they're up 8% than what they were just a year ago. Why? Because your home will continue to appreciate. The cost of living will always continue to appreciate. As long as the property is maintained, properly maintained, the right updates are done, you can bank on equity in your home. So what is different now from 2008? So Congress changed the rules. After the housing bubble, when subprime lenders put millions of Americans into loans that they could not afford, we now have regulations in place. You cannot get the loan unless you are truly qualified, and you must demonstrate that you are qualified for that loan. Check with your lender for the exact qualifications. If you need a lender recommendation, send me a message. So continuing with this NPR article, the next sub-headline is home prices will keep falling. Home prices will likely continue to drop. That's because super low interest rates combined with a superheated demand during the pandemic pushed prices up so dramatically, so quickly, up to about 30 to 40% in just 2 years. Experts are predicting that home prices across the nation will fall at least 10% from their peak. Areas that experience the most dramatic price increases will see the biggest price drops. Let's put that into perspective. On a $500,000 house, if it increased by 30%, that's $150,000 of appreciation. If it decreases, hello, it's the same. And that's what the experts are predicting. Economists are saying that decrease, that potential 30 to 40% decrease, is if the economy does not move into a recession. Economists say it is quite possible that in its fight against inflation, the Federal Reserve could slow the economy so much that it does tip the country into a recession. Now, those are some national stats. If you want specific stats on your neighborhood, I service Greater Cincinnati and Central Ohio. Please send me a message or give me a call. I'm studying the market daily so that you can be more informed and make better real estate decisions. Send me a message, give me a call. I am always here to help.